Welcome, Pat. Happy Thursday. Last week at this time, we were all gorging on food.
Yeah, exactly.
So like we'll never see food again.
Yep.
And it's kind of funny going back and looking at the numbers. I knew it was going to be slow. But I was way off. We were running about 2,200 to about 2,400 contracts every 7 days. So I said, we'll probably come in at, 1,800, and you look down there, 2,200, we came in with a low of 1,891. And look, nobody bought a house Thanksgiving week, and certainly nobody listed one. So I expect listings to continue to climb until the first of the year. And then I think they're going to climb even more unless there's some kind of catalyst that makes sales take off.
Yep.
I don't see it.
I don't really see it either. I was talking to another loan officer right next to me in the office next to me, and he's like, I expect more of the same going into this next year. I think people are kind of waiting for some catalyst, this golden key that affordability is going to come back in a couple of months. And, unfortunately, we've been delivering the same news kind of was it ad nauseum,
something like
ad
that.
nauseum. Yeah. It's been like we kind of said beginning of this year, we said it was probably gonna be a whole hum market. We were kind of talking like it's just going to be whole hum. It has been.
Well, I want to talk about why rates haven't gone down. Because
let's call Jerry and see what happened. Let's see what. Let's ask him.
He may answer your calls, but he does. So you can see we were flat, right? Da 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 da. Gee, housing took off. Wonder why. And then they started tightening. The long anticipated 4 to 6 rate cuts were supposed to happen in this period right here.
Yep.
We got 2, 0.50, 0.25. So they edged them back down.
Which we said last year that was going to happen, but no more than 2 rate cuts.
Yeah. And also, the industry-wide shouting from the rooftop saying we're going to be at 5.5% and all the buyers are going to come out. Well, here's what happened to mortgage rates. So they went down a little bit, back up, down, back up. Get a little closer view here. They certainly aren't reflecting the 0.50 and the 0.25 reductions. So the question that I had and that finding is, how's the national debt affect housing? And I'm going to show that wonderful U.S. debt chart in a moment, but this says here, when the U.S. government spends more than it takes in through tax revenues, the Treasury borrows money from investors to make up the gap by issuing securities, notes, bonds, bills in closed and open markets. While many factors influence interest rates, rising debt could push up rates, investor demand on U.S. investment products, effectively raising the yield on Treasury securities. So they want a better return. And here's the 10-year, which is blue, and here's the 30-year rate for mortgages. So there's always a gap between the two. Yep. So they're going to invest in 10-year treasuries, they'll get 4.5%. And if they're going to invest in mortgage-backed securities that carry some risk, they're going to want a higher return. And that's what's killing us, right?
Yep.
So, here it is. There's our interest on the debt, $1 trillion. And it's now bigger than national defense, which is $950 billion. And you can see that our total debt is $36 trillion. That's with a T. Now you can go through all these other numbers here and it'll drive you nuts, but
if you've got ADHD, it's a good chart to look at.
Yeah, it's pretty bad. But what it does, it underscores the thing that says, well, if debt is really keeping rates from coming down, we're not going to see any significant movement unless one of two things happen. One, there's real progress towards paying down the national debt. It doesn't have to mean that, by mid 2025, we're seeing improvements, but there has to be some movement.
Yeah.
To give the investors.
Well, they're going to trade off the expectation too of, if they see a sizable, reduction or some progress going to that. I think you're going to see, because the market always prices out, 4, 5, 6, 7 months out, in the future. So you're going to see, I think rates, maybe that will help decouple rates and, loosen them up a little bit. Like, hey, there is progress in paying, getting this debt under control.
Well, we're looking here. Yeah, I agree with you. We're looking here at Fannie Mae. This is their forecast. Now, we take forecasts with a grain of salt. I don't have in front of me what they forecasted for this year, but I think it was about 6.3.
Yeah. I personally like forecasts because they're going to probably be wrong.
Yeah, they're fun to look at.
Yeah.
But look at this. They're not showing, and I'll use my handy dandy magnifying glass. They're not showing any reductions. 2025. There it is.
Yeah.
And then you go, okay, well, it'll be next year. Well, they're saying, well, yeah, maybe 6.2, 6.1. So that trend, and be careful of the marry the house, date the rate people out there saying, as soon as we get to the mid fives, the market's going to explode. Fannie Mae doesn't think so. And I don't know. And, and this is where we're at today, 6.84. And you're seeing the same thing that, we're stuck in this rut, right?
Yeah. I mean, we've been, this is where we started the year. Basically the 5.5% coupon was, let's say, beginning of the year was closed. Let's see, 100.11. You take this cursor across the board. I mean, we're pretty much at the same level now. I mean, we've had some fits and starts. Obviously, rates went up in April, and then we saw somewhat of a softening from April through May, June, July, August, and then September we got hit, obviously, with rates. After the Feds cut the rate, we saw rates go back. These are counterintuitive, obviously, with these are prices versus rates, but we saw rates go up again. So now we've been, for the most part, this whole year, if you take this top, you take this bottom, we've been kind of stuck in this channel right here all year. This is kind of the channel. And, we've seen the high end rates, low, 7.25, 7.375. Now, today, you got, just to pull up my $475,000 purchase, 5% down, 780 credit score. You've got the best lender, Provident, they're a paper lender. I mean, a couple of weeks ago, we were sitting at about 7.8, right? And they've softened up to around the 6 and 6.5/8, 6.5 range, give or take. This is 5% down, 780. Everything is dependent on your individual situation, but they have loosened up a little bit more. And I was, like I said, I was talking to another loan officer and hearing on the street, talking to some other people and reading. And I just think that it's going to be just more of the same. I don't see anything that's going to drastically, if we do see rates, I think we are stuck in this channel. I think we do see them float down. We might see them float down to the low 6 range, maybe get into the high 5s eventually, middle of next year. But I just don't see anything on the horizon that is going to be just rip everybody's cover off the ball and say, hey, I'm going to buy a house. Just going to be more of the same.
Next Thursday, we're having the whole team on again, and I'm calling it my 2025 projections. Now, I don't like to project out the year, so I will project the first quarter. I've got some very firm thoughts on how I think Q1 2025 is going to lay out, and I'll lay it out and say, here's why I think this. But I encourage people in the comment section, tell me a couple things. One, we're sitting here at 21,000 homes on the market now. Tell me where you think we're going to be March 1st as far as active inventory. And tell me where you think rates will be. And 3, I know I said 2, will we have any more appreciation in house prices? Because now annually we're at 4%. Where do you think Q1 will come in? And let me know in the comment section, and we're going to drill down next week. I'm going to ask everybody individually to weigh in and say, where do you think we are? Now, we're not any smarter, but I don't think we're any dumber than these other people that are forecasting, because one of the other emails I got is showing what Zillow said, and there's a Realtor.com, and there's one group out there that says that home prices are going to go up 11.5% next year.
Yeah, I saw that. I think I saw that on the news. I think it was I don't know if it was Realtor.com. I mean, there's
It
some
wasn't them. It wasn't
okay.
them.
It was some group that was saying they see house prices go up 11, 12%. Um, that to me just seems like a self-fulfilling advertisement. Like, hey, you got to get in now.
Yeah, that one didn't pass the smell test with me. I mean, here's one that I got that said Fannie Core Logic said house prices are going to go up 2.3%.
But
They were way off 2 years ago. I
yeah,
mean, they forecasted we would be down 1.6, and I think we were up 8. I mean, they were way out there.
yeah,
Fannie Mae 3.6, Goldman Sachs, Housing Wire 3.5, uh, NAR 1.8, Zillow 2.8. Now they'll revise them a million times as we get towards the end of the year, like they did this year. But this is what they're saying, and so you end up saying, well, why, if we're starting to see some pricing pressure right now, um, as far as supply and demand, why isn't it showing up? And
mhm,
because we've got, and this is one of the reasons right here is that our inventory is going to go down now as we get towards the end of the year. There's just nothing going on out there. It's Thanksgiving week, Christmas. I track this 7-day moving average, as you know, with the ticker down below, and it measures the gap too, just like um, the Crawford Market Index does. The gap between sales and contracts,
yeah,
and it inverted Thanksgiving week. I thought they'd both go down equally, but new contracts went above new listings by a wide margin. You can see down below there, like 800 and some odd homes. And when that happens, there's not a whole lot of pricing pressure. So I don't know. Um, it's really hard to watch what's going on between now and the end of the year and pick out a trend.
yeah, yeah. Because
It-
it's just kind of there. It's just floating. At Christmas, it's just very hard, very hard, very hard.
Well, and keep in mind the number of people that are not going to list a home or buy a home next week because next week is my birthday. I mean, that people will just stop. And if any of you out there know any Fountain of Youth beverages, just bring them here.
Yeah, it's called Jack and Coke.
Okay, yeah, I've tried that. That's got the worst effect. Here's what experts say again, as long as we're on the topic. Will home prices crash
Oh my
2025?
God, I'm so tired of these.
Who is this? Market Watch. Trump campaigned on promises to lower housing costs. I'm tired of that too.
Yeah,
Here's what real estate economists say: home prices will go. Okay. You know, frustrated home shoppers might be wishing for the housing market to crash so they can get foot in the door. Yeah. But a housing crash is highly unlikely, and home prices are only expected to go up further from the record highs they hit this year, experts told Market Watch. Now, you got to take the word experts with a grain of salt.
yeah,
They just kept calling till somebody answered the phone. Mind if we quote you? They brought in some people, Bright, Home MLS. This is basically a recap of the same chart that I showed you, NAR. There aren't going to be any policies coming forth that are going to affect home prices. I don't believe in the next year. Most inventory and demand are solved on the local level through zoning and building requirements. It's not Washington, D.C. Now, if they decide to really get out of the way, maybe we'll get some relief that trickles down to the local level. But I don't see, a new president saying, build here.
yeah. No, I mean, well, I think
We're lower rates.
Paul,
What?
actually,
Get lower rates?
there was an article that came out. Paul had quoted in the other day. I can't remember what was on. Pulled it up, but it basically, I think I talked to you about earlier today. But Paul was saying there's not much they can really do on the housing side for the most part. He said it's all supply, and the demand will increase. We've seen it the last couple of years where demand does increase when we get lower rates. If we got rates in the mid fives, I think you will see demand pop out of the woodwork. The predictions of housing, it's amazing too with psychology, the predictions in housing. Now, if you said, what would it be like if, the psychology would be if like, oh, prices are going to go up 15, 20% next year, or on the other side, if you saw an article, prices are going to go down 10 or 15%. I mean, to me, housing going up 1 or 2 or 3% doesn't get anybody excited, but yet that's still, from a buyer perspective, that's okay. I'm okay with that. You want to be buying in that market, or do you want to be buying in 2021 when prices were going up 15, 20%? It's still that herd mentality that people have in terms of stocks and housing. Would you agree?
Well, they're chasing that 2% inflation rate, and it has always bothered me that the only tool that they claim they have is to slow down the economy. And I just wish they would embrace.
Let me jump in quick.
Yeah, go ahead.
I have heard Federal Reserve, I think that Mary Daly from San Francisco. I've heard a couple of the Fed Reserve, a couple of them, and a couple of pundits on Fox Business News. They said the target rate, they quietly have raised it. She said, I think she was saying right around, they'll be happy around 3%.
I've been waiting for that.
I mean, did you notice? I've noticed some of these guys on Fox in Business Market, and like I said, she was interviewed. She goes, well, we'll be happy if the real rate gets around 3%. It's gone from 2 quietly up to around 2.5 to 3. I noticed them kind of, a couple of people being interviewed saying they're going to be okay with that. And that's what, we've been saying. I've been saying that for the last 2 years, is that, we were talking about how this 2% target really is fictional. And I've noticed that in some of the conversations, though, they're saying, well, we'll be happy 2.5 to 3. They're kind of cutting out the 2% level. It seems like real quietly.
Well, how much do you want to break to get that extra 1% down?
Yeah. And nobody's going to, as you often heard me say, nobody's going to ring a bell at the bottom. Say, okay, we're at 2%. We got it's such a big number. There's so many components that go into that number. It's mind boggling, Yeah. So I think they're guessing just like you and I, for the most part. I mean, that's why I've been around in the finance markets for 36 years. I was a stockbroker, and I've seen so many experts that are just freaking wrong. It's just like you said, I have just as much confidence saying what you and I are saying versus some of these guys. Yeah, they probably are a little bit more eloquent in how they're presenting the information versus you and I just sitting here on a 3:00 afternoon TV show or computer show. But it's amazing how wrong they are. But I've noticed how they have really shifted their dialogue from 2 to 2.5 to 3 very quietly. I've heard a couple of people say that. So it's going to be interesting to see. But I think once the Feds get, if they can get things calmed, I think there's just to kind of keep rattling on here for just a bit, Chatty Cathy, is that I think people are just sitting in with the holidays. I think there's people that are sitting there in the wood, in the background, for lack of a better term, is just they're kind of waiting to see how this Trump stuff kind of shakes out. Well,
I
just get that feeling.
Look at this listing success rate over the holidays. I mean, if you want a chart that shows you the people sat on their hands, there they go.
Yeah.
It's like, I'm out. And
you get the election, you get the holidays, you mix those together, and then you're going to have Trump, who's obviously going to be mixing things up. I think there's probably a handful of people are just waiting, to see kind of what happens.
And you can read this, everything. Inflation is going to come roaring back because of the new president, or inflation is actually going to come down because of more productivity. It's like the article I read last week said that mortgage applications are up 12.3%. And then you read farther down the line, and then they go, of course, these numbers are comparing to last year when we had Thanksgiving week. I'm like, really?
Yeah.
Redfin, you're supposed to be smarter than that.
Yeah.
You should have started with that. This looks like an artificial bump because it's compared to a holiday week, but they didn't. They came out with a headline that said mortgage applications are up 12.5 because rates went down and people came off the sidelines. Not a chance. Did not happen.
Yeah.
And, and you look at I'm surprised if they were comparing it that way to Thanksgiving week that we weren't up 35%. But it's that's why whenever I see headlines, I scroll I read the whole thing, and I get down to the last paragraph where they finally go, yeah, well, it could mean this. Like, really?
Yeah. Yeah.
So I think I'm not hearing there's talk of some banking deregulation that could help the industry. I know there's some agencies you and I would like to see go away, like the CFPB.
Yeah.
They're self-funding, aren't they?
I believe they are. Yeah, I believe they are.
They make their money on people that they fine.
Yeah, correct. Yeah.
And for me, so let's say that I wanted to have some flyers to promote a listing, and I have you make my flyers. Okay. And I put you on the flyer about this much, and then the rest of it's all me in the house. Well, proportionally, we have
50,
to share the cost of that flyer, right?
Yep.
Well, if it's determined that you made the flyers for me and you took on all the costs and I didn't pay you anything, they can fine me 10 grand.
Yeah. Yep.
And the thing that made most realtors mad and title agencies and lenders is you have no recourse. You don't even get to go into arbitration. You have no opportunity to dispute and go, actually, here's my receipt. They just fine you 10 grand. And they only had 2 offices, one in Washington, D.C. and one in Phoenix. Now, I haven't heard of anybody that got dinged by it, but the threat was there. And so it's like, I'm not having anybody make flyers for me. I'm paying the whole kit and caboodle.
Yeah.
So
there's a lot of probably overlap, a lot of rule overlap. It seems like every time the government got their hands involved in the mortgage business, there's some regulations been good. Dodd-Frank, regulating more of the mortgage brokers and bankers. But
there was some nonsense.
In terms of the appraisers, the third party, I think there's some nonsense. They could tighten up the mortgage business to make it a little bit more efficient. The 3-day waiting period for this closing disclosure when you get the loan estimate out initially, then you have, people do see numbers, but to have a 3-day waiting period after you've seen numbers, the loan estimate, get this closing disclosure, and to have a 3-day waiting period is still, I know I have seen it so many times in the last several years where, and you've felt it, every realtor, every agent that's maybe watching this has felt the CD waiting period, the 3-day waiting period where the CD goes out on Thursday, you got a closing, but you got to wait. They're supposed to be moving in Friday, but the lender, something short term obviously comes up last minute. They get the CD out, but you got to wait another 3 days. You got a moving truck sitting there. It'd be nice if, you do have some chances to waive that 3-day waiting period, but it's like an act of God to get that done. So they should.
Well, it's an expensive delay too, because like you said, I try to never have closings on a Friday. I like on Thursday, because if there's a little hiccup, at least you don't have to wait until Monday. So I encourage people, don't sign up for Friday closings.
Or month end, month end closing. It'd be nice to, maybe the third week of a month or the second week of the month. But there's so many times that I have heard and seen just, through Facebook posts from mortgage people, the CD's got to go, the 3-day waiting period. It'd be nice if they could cut that down maybe to a day. Say, okay, you got 1 day, once you've seen the numbers, or you can automatically have a third party like the title say, have them verify the fact that the client wants to basically eliminate that 3-day waiting period. Say, yes, I verify that he does, rather than having the client say, hey, I want to, because anybody could probably make that up, but just have a third party.
You should be able to have a signature out there that says, I saw that, I approved it. Let's go.
Yeah. Yeah.
But it's just my little skeptical part says, I'm tired of the government pretending we're all stupid.
Exactly. And that's where that alone, I guarantee you, in the mortgage business, you ask any mortgage person and real estate agent for that fact, that 3-day waiting period has kicked them in the butt sometime or another in the last couple of years. And it's just one of those little things you can tighten up as far as being efficient. We saw the numbers. Jim and Mary Smith are ready to go. Let's sign our docs so we don't have to wait 3 days. It just gets under my skin when I know it's part of the rules. It's embedded in the CFPB and the mortgage industry. But if they could change that, I think that would certainly help a number of people.
There's a lot that they could streamline in the processes without going in and loosening up lending requirements, which would, be a recipe for disaster. But there's a lot that they could do to really smooth things up. And a lot of people are trying that. And Jason here, he's saying, I agree, make 3-day optional. If a client wishes to have 3 days run by family, sure, they can. Yeah, give us options. You're right on the money. Say, look, I learned how to read a long time ago, and I can probably read that closing document in 5 minutes.
Yeah.
Or I may want to take it to an attorney.
Well, like you said,
but you've already seen the document twice before that anyway, right?
Yeah, you see the loan estimate. The loan estimate is just an estimate. When I do a loan estimate, I typically, the mortgage person will overestimate fees because you don't want to underestimate fees. The last thing I want to do is, underestimate, say, and that's sometimes the games that people do play. Not everybody, but they'll say, oh, your closing costs are only $2,500, but when in essence they're about $4,500 or $5,000. I'd rather overestimate. If the closing costs are going to be $5,000, I'll tell them $6,000 just to be safe. But it's things like that they can tighten up drastically.
And you got to understand the state laws when you're moving too. I know when I moved to New York State, fortunately, my vice president gave me a head up and said, hey, before you go to the closing table, you have to understand that your taxes have to be paid up front.
Yeah.
And I'm like, and at the time my taxes were, and this was 1994, I think they were $4,500 on the house. The house was $129,000. And my taxes were $4,500. Well, I had to have that up front.
Yeah.
And, you don't, when you're moving and you're on a tight, you're trying to squeeze every dime together because, there's just a lot of expenses that come up. You don't want to get surprised at the closing table. And yet at that time, thank you, Renee, there wasn't anything out there giving us that heads up officially.
Yeah.
Outside of my VP going, hey, Rick, heads up.
Well, the government did a good thing by basically tightening up the regulations because there's a lot back in the day in 2003, 2004. What they were trying to do is get rid of somebody tacking on an extra point or 2 points on origination fee at the end.
Yeah.
Which I get it. I totally get that. But that's gone. Those days are gone. So you tighten up the regulations. Let's pull them back a little bit to make it a little bit more, flexible. I know we're getting off this topic
and also the 3-day was on there because they were pushing this narrative. People goes, I didn't know I had an adjustable rate loan. Well,
yeah,
you did. You signed several documents that said you did. Now they're saying, well, you need 3 days to go over that. I don't need 3 days to read a document that says on June 1st, 2027, your payment's going to go from $2,000 a month to $3,000 a month at the current rate. Yeah. I don't need 3 days to do that. It really just has to be a sign-off process. To Jason's point, they should be able to choose. I don't understand this. I don't get it. Can I have 3 days? So
and have a third party. If you want to document where it's not the client, but have the third party escrow. Get escrow involved and say, okay, I verify this party has said they want to do this. So it's not me making it up in the background.
Yeah. I think and anyway, those are the kind of loosening up that I'd like to see. There was a lot of extra multi-$1,000 surprises by shady lenders.
Totally agree. Real life. I mean, it's that's what they eliminate. We've eliminated that. Yeah, fees will maybe they'll fluctuate maybe by a couple $100, but there's a tolerance. But like you said, I mean, people were getting surprised by like, oh, geez, back in 2003, 2004, lenders were like, oh, let's add another 1 or 2 points onto this loan, and they'll have to sign these documents. They're at closing anyway. So they've eliminated that. So let's get back to, real time, real, basic stuff. So anyway.
So I'm hopeful for that. I think there's not a whole lot that the federal government's going to do to help the situation we're in. I think in our industry, we're looking at Chairman Powell and the central bank, and we're thinking, okay, he's got to lower rates so he can get housing back going. If he lowers rates, it's because the economy is really choking and this national debt is so out of control that he's going to have to do something by either lowering rates or taking those treasury notes and holding them on their books, kind of like another round of quantitative easing. It won't be because of housing. And I think, and this is just my opinion, if he does get in and he loosens up rates and does it because he feels he has to, it'll be like, yeah, I know this is really going to hurt housing by inflating it again, but we have to do it. And so when people are looking way in the hands of saying, are we going to have a crash or are we going to have inflation on housing again? It could go either way. That's why it's so hard to predict. So, they could come in and go, boy, things are rough. We gotta cut right now. And then you're going to go, whoa, I can get a 4.5% mortgage again. Are you kidding me?
Yeah. Yeah. That's exactly right.
You came in with that now. And, I just got a email from Lennar this morning, 3.99 financing. It's like, so it's out there. It's out there. So, well, Pat, I hope you have a fantastic weekend.
Yep.
And I'm going to a white elephant function on Saturday night. I'm looking forward to that as I am a root canal. But
yeah, we don't have we'll see what happens. Obviously, the feds, I mean, they're going to get meeting together and, next week, it just seems like it's just plugging along as far as rates. Like you said, I think the biggest thing is, I mentioned this more than once, is obviously if people are looking at, it's things are not taking off. They're not falling off the cliff. People are still out there buying, but it's been a bit of sluggish time. But once again, a 2-1 buy down gets you into the fours, high fours, for a year, 2 years. So, something that's about the only secret that I can see that's out there that can crack, somebody to crack into the market with a decent rate for the time being.
Well, next week we're going to do our prediction video next Thursday, and I'm going to put money on it, Pat. I'm going to bet you another $1, but we're going to have to remember that for 13 weeks.
Okay. Yep.
So,
right.
So you have time to save up.
All right.
As notice, I'm feeling so confident that I'm not going to be owing you $1, but we're going to put some pressure on the ladies next week and say, all right, spit it out. What do you think it's going to be?
Yeah.
And we'll see what they come up with. So
Sounds
other
good.
than that, Pat, have a good time. Hey, would spare glasses be a good white elephant gift? I'm just curious.
Yeah,
Jason,
I think so.
Okay. Yeah. I'm digging around here trying to find, I never give good stuff. It's not in my DNA. It's like, I go through drawers and look for things. So anyway, Pat, have a fantastic one. We'll see you in a few days.
Yep. Sounds good, buddy. Have a good week.